Hello, everybody. I welcome you at our fireside chat today with Patrick Sheehan, a managing partner and founder of ETF Partners. Hello, Patrick.
Hi.
How are you
Hello.
doing?
Good, thank you.
Today we'll have a discussion on sustainability through innovation. Patrick, you've started ETF Partners, the environmental technologies fund, a long time ago to focus on sustainability and venture capital. So why did you do it?
It's a good question. We started back in 2006, actually, so quite a long time ago now. And I had been doing venture capital for many years, over 20 years, and just come back from Silicon Valley, where I'd started up a venture business for a group called 3i. Um, and you can never really come back just to the same old thing. So I wanted to do something different. I wanted to start my own thing. But I did find myself uh, wondering what would make a difference, right? So it's hard to come from Silicon Valley to Europe, where it was then, without feeling maybe stepping down a league. And so I asked myself, what were the real problems, and what was Europe best at? And actually, looking at environmental problems and environmental issues, I thought Europe was the right place to be, and it probably would become the defining topic of our time. And so it honestly just felt worthwhile and a great combination of giving us, as a business, competitive advantage by being very early in the field and doing something worthwhile. So that's what I did.
Thank you, Patrick. As for climate change by itself, it's quite a huge problem. So why is it that relevant to venture capital?
Well, you could say venture capital is a small industry, and how can it make a difference in the planet? But I think if we want to make change happen, we have to empower entrepreneurs. And change often starts small, but with great entrepreneurs, big changes can happen quite rapidly. And venture capital, I think, is really a rocket fuel that can power great entrepreneurs to do amazing things. So I think actually it really is part of the solution. It's not the only solution. But if we want to see rapid change happen in the world, it's a great way of just giving the right people the right resources.
So you mean that tech is also influencing the climate change by itself? So is that more a part of a problem, or as you mentioned, it can be part of a solution as well? So what is your viewpoint on that?
Well, I think if we look historically, then tech's been part of the problem. You know, the 20th century has been about exploiting the planet uh, for the benefit, obviously, of humanity and the standard of living, but it's probably um, done a lot to contribute to the problems that we have today. And so tech clearly is part of the problem. But I think we're now in a new age where tech is also part of the solution. Um, but tech is does not come with moral values attached. It's how we use it that counts, right? So you can look at the internet as an environmental disaster because of the data storage and energy consumptions around data storage, and that's one way of looking at it. But equally, you could look at it as an amazing tool to exchange knowledge and create enormous change in the way we do things. So I think for us, in the Environmental Technologies Fund, we try to see how tech can make a positive difference and be part of the solution. Sometimes part of the solution in terms of just tidying up the problems it's created, but nevertheless part of the solutions that we need.
And private equity industries for a while already trying to adopt environmental, social, and governance standards through LPs and GPs on its part as part of the addressing of this sustainability. Do you think that could be a way, a solution to go, or why couldn't that work?
It's again a good question. ESG, as it's called, environmental, social, and governance, is becoming a big movement in investment generally, and particularly in private equity, and also now in venture capital. And it's trying to give a framework for responsible investment. And clearly that's really important, but it isn't really the solution, I think. So I don't want to criticize the good things it does, but it's more a compliance tool, compliance with good practice. And whilst that's important, it doesn't of itself create the level of change we need in the world. And to illustrate that, you can see mature companies, even coal and oil companies, for example, can, through good governance, get very good ESG scores. Um, and great, but obviously that's ridiculous on a bigger picture level. So we talk about positive impact as being distinct and separate from the compliance around ESG. And when we look at investments, we want to see very, very positive impact. And so that's quite different. And I think it's actually really important. So there are many people saying that ESG is the solution. I think it's a useful, if confusing tool, but we need to go beyond that.
And how should we measure that impact then?
It's difficult, right? Because you can have many impacts. And so we've wrestled with this question for quite some while, since we started, in fact. When we started back in 2006, there was a whole wave of people going into what became called clean tech. And there was kind of a view that anything with a windmill or a bit of solar on it was green and anything else was not. And so we looked really carefully at how we see impact across the whole chains of supply and demand that companies are in. And we evolved initially a very complex methodology to measure it and trying to measure the carbon equivalent impact. But we're dealing with young companies, and the young companies' footprint is not so relevant. What's relevant is their potential impact, what the change they can make in the world going forwards. And so our initial attempts were not very helpful, and we've now moved to a benchmarking system which we think works quite well, where we look at the impact of the innovation, the additionality of the innovation, and various other metrics, and we score the companies as we appraise them, and we also measure their performance during their life, because they only really have impact if they're successful. And so success is part of the criteria that we're looking to achieve.
And is there a case that focus on sustainability can compromise on venture capital returns, or what do your investors think about it?
Well, our investors invest in our fund for profit and without compromise, and so for them the need is the opportunity, and on some levels that's how capitalism actually ought to work if it's going to be useful in the world, that it's to address real needs. And so with climate change we see enormous need, and alongside that we believe we also see enormous opportunity. And that's not to exploit the problems, it's to solve the problems. And so our investors believe that we're not compromising, we're actually seeing the world change rapidly and helping the world change rapidly, and doing that right is both responsible and profitable. And frankly, look at industries like the energy industry. It's changing massively in front of us, and the rate of change is just going to accelerate. Look at the car industry, it's the same thing. In fact, you can look at almost any industry now, and you'll see it's either changing already or on the cusp of change because of environmental pressure and legislation, particularly here in Europe. And so actually, we see huge opportunity rather than compromise.
And is there really more focus now on sustainability in the investment world? And are investors really serious about it?
There is a lot more focus. When we started, it was very missionary, and we were endlessly explaining to people that there was actually an investment opportunity. We wanted to talk to big corporations about it, and they were probably not very interested 10, 15 years ago in general. One or two great exceptions, by the way, were very interested, fortunately. But we then moved to a phase where companies had a PR budget to address the issue. And we've moved beyond that to where companies are now actively engaged, and the leadership of big companies is really stepping up. You know, we're all on the same planet, they recognize that, but the need for change is clear. And so these days we can talk to the CEOs of those same big energy companies, and they will completely agree with us that their world is changing rapidly and they need to adapt. And so actually, I think there's people, and even particularly probably in the past 18 months, we've seen a step change where big corporations are really accelerating what they're doing, perhaps much faster than government. You know, we used to see leadership coming from government, particularly the EU. I think we now see leadership coming from the corporate world, and so I think there's a big change there, and that's only going to accelerate, I think.
And people have known about climate change for years. And why have investors not acted before?
Well, it's a great example of a problem which is designed to be ignored. So it's got human beings are not very good at addressing intangible problems. We're not very good at addressing problems which are a long way away. And actually also the problem is spread amongst us. You know, I can't change it on my own. And so you put those three factors together, it's almost as if climate change was designed to slip under the radar. And so we've almost had to reach a point of crisis. In fact, we probably have reached a point of crisis before there's been a sense of urgency. And I think now, you know, you look at the news and people talk about 10 years to save the planet. The dialogue has changed from climate change being an image of a polar bear on ice, which is kind of a nice image. It's not about saving the polar bears anymore. It's not about climate change. It's about climate emergency and saving human beings. The planet will be fine, by the way. It's just the people will have a problem with, and I think that's now recognised, and there's real urgency now, which I think is not before time.
And what is the impact of COVID-19 on the pandemic on the sustainable investment movement?
It's early to know, but actually I think it's a real wake-up call, and we've probably all seen articles that say, you know, clearly the COVID pandemic is incredibly serious, but it's pretty clear that climate change is even more serious. It's pretty clear that we've been complacent about the durability of our society, our standard of living, our civilization, and COVID's exposed that to some degree. By the way, we're resilient, we'll get through, I'm sure. But it makes the point that crises can happen, and it makes the point that those who are prepared do better. And so I think it's given a far greater sense of reality to the problem of climate change. And we see now governments, particularly around Europe again, beginning to address these questions. And as we see economic stimulus from the EU, from 750 billion, from the German government, 130 billion euros, within these recovery plans, there is a serious debate about what sort of society we want to see with this money. And very high up the agenda is the greening of the economy, and making the economy more resilient. And so I think we'll see a huge acceleration of the whole sustainability agenda because of this.
And what investment areas do you particularly like now?
Well, we've been looking very hard at the digitization of the world, even pre-COVID. And to your point, the COVID crisis is accelerating digitization. You know, we're now having an interview via Zoom rather than face to face. But the world is it's probably leaped forward 5 or 10 years in its speed of digitization, and so the digital and its impact on the real world is of profound interest to us. That's probably the first area. Second area we've been looking at quite hard is movement, or smart mobility, and we see again, it's an area where probably there's not been huge change to date, and where a lot of change is needed. And so we've been investing. Even during the pandemic, we announced an investment in a company called Urbance, which enables more effective and more green last mile delivery services and things like that. So we've been looking quite closely at that area as well. And I'll mention a third, which we continue to look at in great detail, around the theme of circularity. And circularity means how we use and reuse resources more effectively. Ideally, ultimately, to where we just keep using them and we don't need to keep extracting resources from the earth. So we have a range of things, of which I've just selected 3. But as we come out of various COVID lockdowns, I think we'll see an acceleration of digital and an acceleration of sustainability. And so the area we're looking at in the crosshairs of digital and sustainable, I think will be powerfully impacted.
And what do you think would be the outlook for sustainability in venture capital?
I think it will become, and is becoming, much more mainstream. You know, we and a few other funds have been on our own for over a decade as pioneers. People tell us we are the authentic European leader in the sustainable venture capital, but I think everyone will join in, and that's great, by the way. It's needed, and so I think there's a lot we can do, but there's so much more that needs to be done, that we would just like to see this movement become much more mainstream.
So your website is saying that you are quite optimistic. So why is it so?
Well, it's almost a deliberate attitude. By the way, I'm just naturally optimistic. I think entrepreneurs and venture capitalists tend to be. But also, well, I'll give you a story to illustrate it. And this is a story from when I was in California in the dot-com era, and it was just coming to the end of the dot-com era. I was in a car with a wonderful man called Bob Hambrecht, who had an investment bank called Hambrecht and Quist, and I was asking some very negative questions, I think, about what was likely to happen in the dot-com boom and potentially bust. But we were in this car just as it came around the freeway, and you could see San Francisco arising through the mists. And he turned to me and he said, "You see that city?" He said, "Optimists built that city. Pessimists did nothing." And so I think that's an illustration to me, which I bear in mind, of the importance of optimism to create action. And so I'm naturally optimistic. I think it's a deliberate house style for us as well. But over and above that, I think we are seeing sustainability being incorporated much more meaningfully into the investment world and into society, and that does give me a lot of hope.
And as we know, the agenda of sustainability, if we take the global agenda of sustainability, is quite huge. So what part could venture capital deal with? What segments would be more attractive to invest in?
Yeah, well, it certainly won't deal with all of it. So venture capital is not a tool to be used everywhere. It's a scalpel rather than a multi-purpose penknife. But it's very good at providing capital to great entrepreneurs. It's very good at providing capital to intelligence-rich, asset-light businesses. It's not very good at funding infrastructure or the big projects that will be needed, and that will happen elsewhere. But in terms of enabling innovation and change based on technological innovation, I think it's a fabulous tool, and that's where we'll see venture capital make a difference.
As you know, our major audiences are venture capital firms, private investors, family offices, multifamily offices on the one side, and serial entrepreneurs on another side. So if we take startups, for instance, how could they address this issue of sustainability? Because especially during this pandemic, most of the startups, they also encountered lots of problems they have never encountered before, and it's the first global event we really face now across different countries, different segments. And how could they address this issue, not only to stay afloat and sustain, but also not only to survive, but to succeed? What could be your advice, how to adjust and how to implement this sustainability as part of the business model for startups?
It's a good question, and it, if we just load it onto people as another problem, it probably doesn't seem very helpful. So I think that's not really the right way to go about it. So the point I would make is that there's a lot of opportunity around change. In fact, you need rapid change to have opportunity. Small companies can't compete against big ones unless there's change, unless they can create change. And so as we move towards a more sustainable world, we will see some very rapid and even chaotic change, and the opportunities will be in there. For those people who are already running companies, that's not necessarily helpful, but I think it's still there's still a few points I would make that we find it's much easier to recruit great people when we have companies that have a positive attitude towards sustainability, to climate change, as well as, of course, there's diversity and other important issues. But actually, I think being a sustainable company and declaring it and working towards it is attractive for employees, and so it's helpful just in gaining resources. Of course, entrepreneurs are also very creative and adaptable, and I think as we see needs change and society change, I think the ability to react to change, to abandon what isn't working, and to move to what is or will work is critically important. And in our portfolio companies, we've seen that. We've seen companies, we have one company whose revenue declined by 80% in the first week of lockdown in the UK. They've adjusted their business model slightly. And by the way, monthly revenue run rate is now double what it was when they went into lockdown, because they're doing something even more useful. So whilst that's difficult, creativity is free, right? And so we've been encouraging our entrepreneurs, yes, to cut costs and be responsible as they hit a downturn, and that's really important. But also to spend a bit of time, maybe separately, thinking creatively about what to do, retaining optimism, searching for the opportunity, and I've seen remarkable results in that as well.
So you've started answering my next question already. So about the approach of smart money investors in the collaboration with their investment targets and their portfolio companies. So we see now lots of GPs moving not only from investments, but also providing human capital to support their investee companies. So what is specific about this interaction and collaboration between investors and their investees for sustainability and related startups in your mind? Because you're more value-oriented and long-term value-oriented for society as well?
Yes, and I don't think it's fundamentally different, but I think it's almost easier to have a clear sense of purpose, or sense of where true north is. And one of the secrets of venture capital is alignment of interest. Right? One of the key points: we don't own companies, we own minority stakes in companies. We don't tell entrepreneurs what to do. We try to help and mentor and be useful. And so alignment of interest and maintaining alignment is critical. And if we do that, centered around values and purpose, then it's also durable. And so in that sense, I think what is not necessarily unique, but is helpful around a focus on purpose and sustainability is it maintains alignment with the right entrepreneurs very well. And by the way, through this coronavirus crisis, we've been working very closely with our entrepreneurs, and some of them I'm speaking to on a daily basis, because things are changing just so fast. And so there's a real collaboration. They're running the companies, not us, but we're finding ways to be as useful as possible. And sometimes that's just listening.
Was there any difficult situation in your portfolio, for instance, we all encountered in COVID-19 a problem to make companies more efficient, and at times cutting costs, and at times some of portfolio companies needed to optimize their teams. And when you have this value-oriented people and sustainability focused, you have probably a bit different team spirit, because it's about community, it's about society, and people are really deep in their roots in what they're doing. So was there any place for any difficult decisions, and how to motivate the team during the difficult time? And what about crisis communications, if there was a place for that as well?
Yeah, and I think you may be very politely saying, if we're trying to be nice and value orientated, can we, or can our CEOs take the tough decisions that have to be taken, or do we end up in a kind of wishy-washy way ducking them? So I think that's actually the underlying question, and the answer is we don't duck them. We can't, because the companies have to be successful, or there's no positive impact. And so actually you know, we have to be respectful, and I think we have to be very careful about how we deal well with people, but we can't just be soft and wring our hands. And I'm actually pretty proud of our diplomats. They didn't spend any time wringing their hands over things when this crisis struck. Actually, we had prepared with them a little bit in advance, but they acted immediately, and sometimes taking very tough decisions, not just furloughing staff, making, in one or two cases, quite a lot of staff redundant. But people understood it, right? It wasn't, everyone can look around and see the problems. And if revenue completely disappears, it's obvious companies have to take tough decisions. So then I think it's down to how you treat people and how you communicate. And I think you need to be seen to communicate with honesty and integrity. And actually, people took things very well. So the morale in our companies has remained pretty high. And by and large, the CEOs have done a fabulous job, I have to say.
What do you think about diversity as part of sustainability, diversity in the boards of directors of investee companies? And we see that a lot of LPs are keeping this issue in their focus, also their investment process and investment selection process as well. So how do you address this in your investment mandate approach and investment process?
So it's an issue we are concerned about, and we're trying to actively address. So we have a couple of programs to try and increase diversity amongst our own staff and amongst the boards of companies and the companies that we invest in. And whilst we have been active and whilst we have been doing our best, it's frankly not good enough yet. So, I'm not standing here saying I'm happy with the results. And I think that we have a journey to go on. And we can't just flip a switch, but actually it's a serious problem, and we seriously need to address it. Not just ourselves, by the way, I'm speaking for the whole industry.
Yeah, and probably it may vary in terms of geography, right? And probably in terms of development of each particular country, emerging market, or that could be a developed market. So how do you solve this kind of diversity in terms of the natural environment of this particular sustainability startup?
It's a good question to which I do not have sufficient answers yet, honestly. But we are actively discussing it and working on it in our team. We would like to find greater diversity to support, and we're actively looking for more women for the boards of our companies, as just one example. But honestly, I think society's got a long way to go. We don't stand aside from that, but we'll try and do our bit to push it along.
And if we take into account that it's quite a broad issue still, and investors, some of them, they just approach this in terms of their balance between risk returns and sustainability and more of a global agenda. What could be the role of broader communities, not only VC, but communities supporting these particular investee companies? What is the role of community now after COVID-19? Because I think it's strengthening in this kind of global impact changes.
Yeah, I think companies can only survive and thrive and deliver solutions to people if people want to adopt them. And so actually everything is driven by the attitude of community ultimately. The political environment in Europe for more than a decade has been very positive around sustainability and the green agenda. And that's because the populations of Europe have cared, right? As the politicians respond to popular opinion. One of the reasons I think there's been a big change in attitude towards sustainable investing in the past 18 months is because of the whole movement founded by Greta, right? So even one person done right can make a difference, but what really makes the difference in the end is the community involvement and the clear fervour that's been generated around that particular movement. And when people see that, then they react. So you know, no company is an island, and we all exist in our communities.
And what could be the advice for investors how to build their investment strategy on this sustainability issue? Because currently we have quite difficult times in terms of global economic crisis, and how to address still the sustainability and balance it with the risk return profile and still find good investment targets across different geographies, how to find these germs.
Right. Well, I don't think it's wise for people to suddenly change what they do, to suddenly say we need a different investment mandate altogether. But I think that's probably a big risk and may not be successful. But I think it's important to start to integrate sustainability into the normal investment processes and decisions. You know, more sustainable companies are fundamentally more resilient and naturally should be more attractive to invest in than less sustainable companies. So even at a very simple level, it makes a lot of sense. So the question is how do you frame that so you can take decisions around it? And I think there's a journey of learning. Now clearly there's some big funds who've come out with sustainability offerings, and you know, I'm really pleased they do, but frankly those offerings should be spread across their entire product portfolio, rather than, you know, have an offering. If you like sustainability, we'll give you this. If you like old energy industry, we'll give you that. You know, I'm not sure how genuine that is, and so I think people need to integrate it at the core of their practice if they really want to be seen as authentic.
Do you have any case of successful business model pivots, for instance, across your investment portfolio due to the current pandemic, or most of the cases are really sustainable enough already at their early stage, and they don't have to adjust too much to change their path through crisis?
We're seeing companies adjust, but I mean the biggest theme clearly is that the more digital the companies, then the more adaptable they've been, and actually the more successful they've been through the crisis, as we've all gone online to a fairly high degree. And so I think it's accelerating the digitization of companies. It is probably one of the core outputs from this. That is making the companies more resilient, and hopefully it also enables them to become more sustainable at the same time. But I think we're also a little bit too close to the whole crisis to draw too many lessons. I've sat on a number of boards with people who've variously said, well, we've been through recessions before, we know what to do, right? And I've tended to say, you know, possibly sound arrogant, I've been through a few myself, but I'm not sure it's that obvious because this is not a normal recession. And whilst we should learn from the past, we shouldn't be slaves to the past. So you know, this may or may not be a little bit more of a V-shaped recession. We just don't know. But I think there will be more change towards a digital world and more societal change than there has been coming out of other recessions.
And what is that different of this particular crisis if we compare it to the previous ones, to your mind?
They've all been a little bit different, but I think clearly this was big picture. This was pretty instant, without that much warning compared with most recessions. There's always a little bit of warning, but there's far less here. And we're in a globally far more connected world. And I think there's been a belief that a number of countries might bounce out of it into a relatively V-shaped recovery. So some people seem very certain of that, others really doubtful. But I think this is more in the nature of a short, sharp shock than anything else. And so we have that's one big difference. I think another big difference is the degree to which governments are marshalling resources to prevent catastrophe and also to ensure prosperity as we come out of the crisis. And that's being done with a speed and scale that we've just not seen before. And so there's an enormous sort of bet that actually will bounce back relatively quickly because of those stimulus programs.
What would be your key recommendation to go for our audiences? What they should focus on to integrate sustainability into their agenda? Because currently, I think after today's global crisis, we don't have that much of a way out. But to integrate sustainability on various levels, either individual or corporate or startup level, investor level, all the way through the value creation chain, right? So how to integrate this, how to include it into one's agenda, and not only to sustain, but to succeed through different types of crises. And I don't think that it's the last crisis, of course. We'll have more crises on the way, and how to make it more manageable, more predictable, and kind of a new normal, as they say.
Great question again, but so I think you can think of sustainability as being good for the planet, but you can also think of it as being good for your companies, right? Mm-hmm. Sustainability, another aspect of sustainability is resilience, and that's becoming pretty clear now. So I think I would say this is or should be a CEO level issue, and the person who should own it should be the CEO. I think there's a lot of learning for companies to do about how they change their businesses rather than just measure data. It's not about, to my mind, it's not just about ESG, environmental, social governance metrics that you give to someone else. This is about how you make change happen to have a better, more relevant business. And viewed that way, it should be seen, I think, as an opportunity. And I think I'd say to CEOs, if you don't do it, your competitors are going to do it, and they will become more attractive businesses as a result. So I think it's also urgent now because there's a competitive race. And so I would say that there should be a sense of urgency. It should be led from the CEO. And then there needs to be a simple language to describe it. And to my mind, the language starts with purpose. So purpose is a really useful word here rather than impact, by the way. And so I think putting purpose into business is powerful and good business, and creates a frame of reference you can measure things around more easily. If people are interested, the way we do this is, by the way, published on our website. There's a white paper called Our Impact, and that does explain things in more detail than I will here. But I would then move from the core purpose to simple metrics to measure that purpose. And what they are kind of depends on the business in reality.
So it's a great keyword, purpose of your impact, and actually scaling your impact from individual to community level to global level at various ways, so that the whole system, the whole ecosystem of investments is getting more sustainable and keeping up all the elements in line with this purpose, as you mentioned. So one of the most important integrity components is the alignment of interest between all players and community, society, governments across all the countries, irrespective to the situation in which each particular country finds itself as well. Either it's a developed world or emerging economies, so that we could keep the whole system more sustainable. Thank you so much, Patrick, for this wonderful conversation. And I think this type of conversation bring lots of value to our communities. I thank you for referring to your website and more information which our audiences can find there in terms of how to integrate sustainability into their own agendas, how to work with their communities on sustainability, and work with investors and startups both ways through this alignment, focus, and purpose, as you mentioned. And dear all, so I invite you also to join our Startup Leaders Club in a while. And we invite you also, Patrick, to participate in various formats of our interaction between members of our community, investors, and serial entrepreneurs. We have roadshows, keynotes, masterclasses, and Startup Leaders Clubs. You're always welcome to join and promote this very important issue of sustainability for all of us, because there are many aspects still to address. And we can go to more specific details and even probably masterclasses, how to integrate sustainability in particular sectors, maybe companies, and do some case studies as well. Thank you so much, Patrick. And we wish you all the best. And please join different sessions of ours. And you can also offer different formats of new interactions between investors and entrepreneurs to make the whole VC world more sustainable through the crisis, and thanks to technology.